We all know PayPal and probably we all use PayPal, but should we all invest in it? Well, first of all, we have to take into consideration the recent results of PayPal, and there are two factors that are really worrying. First of all, the debt. The long-term debt went up from 8 billion to over 10 billion. And actually the whole situation with debt started in 2019, then they doubled it in 2020, and now in 2022 they are adding some more debt into it. So we may see that there is a pattern emerging, and it's not a very healthy one. And the second thing that is worrying, if we look at their recent results, are the earnings. If we look at the operating income for the last quarter or even for the last 6 months, it's substantially down if we compare it to 2021. And at the same time, expenses went significantly up. So the net income is actually minus $341 million in the last quarter. So the situation doesn't look that good because the earnings are going down and at the same time the debt is going up. Okay, but these are just quarterly results, so maybe they're just a small fluctuation. So let's try to find out more about this company. First of all, let's see who is investing in PayPal. So, are there any insider buys? That's a check, because there are actually a lot of insiders that are buying and that are selling. But the amount of people that are buying the company is substantial in the recent months. And what about super investors? That's also a check. There are a number of investors that have their money invested in PayPal. And if we look at them, we can see that almost all of them added or bought PayPal in the last quarter. Only Terry Smith reduced the amount of money invested by around 8% in the last quarter. So as we can see, a lot of investors believe that it is the right time to buy PayPal. But let's try to find out why. What may be the reasons for those investors to invest in PayPal? So let's look at some fundamentals of this company. First of all, return on invested capital. That's a check. In the last 10 years, it is around 11.6%, which is really nice because what we are looking for is a return over 10%. And what about free cash flow growth? That's also a check, and it's 20% in the last 10 years. So that's really, really good because as with return on invested capital, we are looking for a return over 10% and we're getting double that. Okay, what about shares buyback? That's a check. In the last 10 years, they bought around 5.6% of their shares back, which is really nice because what it means is that we don't have to invest any extra money, and the shares that we have are now representing a bigger portion of this company. And also we should remember that the management just recently approved a $15 billion repurchase program. So they are going to buy more of their shares back. What about dividend yield? That's an X. PayPal is not paying any dividends. And what about years to pay debt? That's a check. It would take them just below 2 years to pay back the debt with their current free cash flow. So even though their debt is going up and it's now over 10 billion, they can pay it back pretty quickly. Okay, so that looks really nice, but let's try to value this company. So for that, we will have to estimate the growth of the company for the next 5 years and then another 5 years, and we will make 3 assumptions. We'll make a low, medium, and a high scenario. So for the low scenario, let's say 11% growth for the first 5 years and then 9% growth for another 5 years. For a medium scenario, 15% growth and then 13% growth, which is just below the growth rate of PayPal for the last 10 years. And then in the high scenario, it's 18% for the first 5 years and then 15%, which basically represents the growth rate that they had for the last 10 years. So in the high scenario, we believe that they will keep on growing at the same level as they were previously. Okay, so if we use those estimates, we have an intrinsic value of around $99 to $164. But of course, this is not the price that we should be looking for. We always have to use a margin of safety. I use a 30% one. And if we apply a margin of safety, then the price we should be looking for is somewhere between $69 and $115. And the current price is $91. So as we can see, for the medium and high scenario, it's green. What it means is that if we believe that the company is going to grow at the same rate as they did, or just a little bit slower than they did for the last 10 years, it can be a nice investment. But if PayPal would slow down their growth, and still the growth of 11 and 9%, it's an impressive growth, but it would mean that the current price of $91 is actually too high to consider it as a good investment. So it's a bit of a tricky situation with PayPal, because on the one hand, we have some really good news. So the fundamentals are strong. There are some changes in the management, and they are buying back shares. But at the same time, their quarterly results are worrying. So you have to decide by yourself. You have to do your own due diligence and figure out which story do you believe. Do you believe that the fundamentals are that strong that the company will continue to grow as they did before? Or do you believe that those recent results are the beginning of a worrying trend for PayPal? So that's it for today. Thank you very much for watching. I hope you enjoyed it. If so, then please like it. And if you want to see more videos like that, please subscribe to the channel. Thanks a lot and see you in the next one. Bye bye.